Hello and welcome to another lesson. So actually today we're going to be looking at which fair value gap to focus on. So when it comes to fair value gaps, you want to narrow down your focus on the most important ones and the most likely to produce really a dynamic move in the market. So let's dig in. So which fair value gap do you focus on? So when considering the fair value gap to focus on, you want to look at three things. Number one, you want to look at the narrative. So the narrative is essentially, for example, if you have done your analysis in the markets, and then you've come up with a storyline, or rather maybe an idea of where the market might be drawing towards. So maybe you have found maybe a fair value gap in the monthly chart that the monthly price action could be drawing towards, and then you come to the weekly and the daily and it supports all those ideas. So you build a narrative behind maybe the concepts that you've learned in this course. That's what we are now calling the narrative. So that's the first thing you want to consider. Secondly, you want to consider the fair value gaps that are in the higher time frame. So they'll always take priority over the fair value gaps in the lower time frame. The final thing you want to consider is the key turning point. Is it a key turning point that this fair value gap is forming in? So those are the three aspects you want to look at when you're considering maybe which fair value gap to focus on. So this is because smart money will focus on these very fair value gaps. So that is the reason we want to focus on those fair value gaps alone. So as an example, narrative, as we have said, is consider what the market is doing. You want to ask yourself three fundamental questions. Number one, where is the market? For instance, in this example, the market is around this level. Where is it coming from? We are seeing a monthly fair value gap down here that the market bounced from earlier. I think it was in September 2022. And where is it likely to go? So the final question, where is the market likely to go? So in this instance, depending on this analysis, the market was likely to go higher from maybe this monthly imbalance. It was likely to go higher in this price range. So where it will reach inside this price range is really not initially a major concern, but you want to pinpoint maybe a key reference point or a fair value reference point that the market might be reaching up to. So there's a fair value gap here that it could be reaching into. So as long as you have this range, that is your range of opportunity to trade. Because this is a monthly chart, you still have a long way to go even before it reaches. So it might even take 6 or even sometimes up to 12 months before it hits that target. But your focus will be on any fair value gap formed towards going up now in the lower time frames. So you want to be trading fair value gaps that are likely to move the market in the direction you're thinking. So as we have outlined, for example, if the monthly chart is looking like it wants to expand higher, you want to trade fair value gaps that are pointing higher in the monthly or weekly chart so that you're in line with the higher time frame direction. The second thing you want to look at is the higher time frame will always take priority over the lower time frames. So the higher time frame here includes number one, the monthly chart, number two is the weekly chart, and finally the daily chart, which is the minimum time frame you want to look at in terms of defining higher time frame. So the higher time frame fair value gap will take priority over now lower time frame. For instance, the 15 minutes chart fair value gap, we cannot really expect it to move the market in a longer term direction compared to what the monthly, weekly or daily chart will do. So they tend to be more sensitive and produce more dynamic price moves. And what we want to focus on is price action that is dynamic and is extended in a longer term period, because we'll have more opportunities to trade in the lower time frames if you're focusing on the price direction that is expanding in a dynamic manner and also going in an extended time period. Yeah. So another thing you want to look at is key turning point. So when I talk about the key turning point, these are points in price where we expect a dynamic price move. So you have looked at the monthly fair value gap as a point where price might move dynamically away from it once it hits it. But you have to look at maybe elements in price that will indicate probably that this market might reverse from hitting this imbalance or fair value gap. So once it has hit it and you have seen signs of rejection, then you want to now hunt for opportunities in this price range in the lower time frames. So for instance, when this market will typically create a fair value gap on the lower time frame at this key turning point. So we have looked at this key turning point as a point where price may expand away from. So in this instance, this is a weekly chart, and we previously looked at the monthly chart. So we are seeing that price began to slowly expand away from that level, but we are seeing now it creates a fair value gap on the weekly chart. So this is the indication of now that the market is now willing to expand higher, and we'll be looking for any entry opportunities once price is coming back to this imbalance or fair value gap. So in the lower time frame, maybe the 15 minutes or 1 hour, you will find opportunities when this market is coming down to retest this fair value gap on the weekly chart. So, but the key thing is the idea began from the monthly fair value gap. So examples of key turning points as I've outlined here, we have the monthly, it could be an order block, it could be a fair value gap, or maybe a liquidity that has been taken out, or even it could be a weekly order block, fair value gap, or liquidity being taken out. So you want to go into your charts and identify these key turning points in the market that produce a reaction in the monthly and weekly chart, and then drop into your lower time frame and look at the imbalances it created. So that's what the exercise you want to be doing, and also you want to annotate and journal all these ideas. So thank you so much for watching. See you in the next lesson.